used to enter trades the moment I used to think something was about to happen. I'd mark up my zones, I'd see a candlestick form, and boom, I was in. 9 times out of 10, I was early. Not necessarily wrong, but early. And the truth is, the market doesn't reward speed, but only rewards timing. And that's the difference between a blown account and a payout. In this video, I'm going to be showing you how you can avoid the FOMO entries, how you can stop over leveraging, and how you can finally wait for confirmation before you enter a trade. And this is the shift that has changed my overtrading to profitable, consistent payouts. So let's move on to the charts. Now that we're on the charts, we just need to make sure we understand how price moves. So this, what I just drew right now, is the bearish push, and then price tends to retrace. So we have the push, and then price needs to rest while it climbs back to the origin. Now this is the point where we're supposed to kind of make choices. What is going on with price? Where is the rest of price gonna go? Are we gonna experience a push to the downside, or are we gonna experience a push to the upside? Now, this is how our analysis comes into play. This bearish push over here shows us that sellers are in control. But as soon as we get to the point over here, we have to understand who is gaining control so we know if we're supposed to take a sell or take a buy, which is the opposite. So over here, we have something like this that is a supply zone. Now, this supply zone, I'm going to demonstrate how we're going to draw it on the charts. But for the time being, the supply zone is a discounted portion where sellers are agreeing to sell what they have back to the market. And a demand zone is the same thing, but the contrary. Now, if this were to be flipped, demand zone would be something like this. All I did was I just inverted the scale, and what you would see in front of you over here is something like that. It's a discounted price where buyers are agreeing to buy back into the market. Going back to the sell portion over here, this is the area where we have to understand what is going on. And what I really want from price is to show me, is it giving rejection over here, or is it giving the contrary? So when we get to this portion right here, price could either do two things. Either give a rejection, which shows me that yes, this supply zone is validated, and I am only and simply waiting for another retest or a pullback to take the sell. And then this over here would be the tradable portion, and this over here would be the readable portion. So sometimes price is readable but not tradable, and sometimes it's tradable when we take advantage. Let me kind of just recap so we understand exactly what we need from the market. After we see price have this push over here and then a retest to the supply zone, what we really need to focus on is rejection from the supply zone to show me that this portion over here is not letting price cross. If I do get the rejection, all I need to do is wait for a retest that gives us another validated supply zone to then take the sell. Once a supply zone gets tapped into, it is mitigated. Mitigated means the portion has served its purpose, and now we are moving on to the next supply zone, which would be this portion over here. So now that we have this ready, we are now moving to the charts. Similar to what I've been demonstrating earlier, I'm going to show you how it plays out on the chart without overcomplicating it, without FOMO entries, and with confirmation, so you understand what portion is the readable portion and what portion is the tradable portion. You can see this clear bearish push over here, which I'm going to mark the top with a ray over here. Now, we'll get back to this, but for now, we need to understand that what I've just showed you is this bearish push followed by a pullback. Now, some of you might ask, why is this an internal pullback? Well, over here, you have the swing high, and over here, you have the swing low. Everything that's happening in between is called internal price action. Now, what we need to focus on is the external, which would be these swings and these swings. What is price doing at the extremities? So if we focus on this portion over here, I'm going to zoom in so you guys can see it clearly. If we focus on just this portion where it is the extremity. So this over here, price was not letting buyers continue gaining control. because at the extremity, this is the most discounted price where sellers are ready to be in the market. Now, what you need to understand is if the body was closing over this ray, then we are understanding that buyers are gaining control. But clearly, what we're seeing over here is rejection, rejection, rejection. Price tried to enter this new territory, but then got rejected in a very strong manner, which you can see clearly by this candle over here. Now, this is an indecision candle known as a doji candle. And we need to understand that when we see this candle over here in a bearish market, the reason I say bearish market is because we have strong sellers. We don't need to forget the extremities and the range that we're focusing on. And so once we see an indecision market at the extremity, this is showing us bearish intent. This over here becomes the supply zone that I was speaking about. And what we need to do is right now I am on the 2-hour time frame. I'm not going to make it so complicated. I'm simply going to go to the 1-hour time frame. And so if I go back to that same extremity on the 1-hour time frame, we can clearly see how I can refine my supply zone. The way you have to refine the supply zone is it's the last bearish candle from the wick to the wick before the push. I'm going to make a separate video so we know how to exactly mark our supply and demand zones. But for the sake of this video, just follow through. And what I'm going to do over here is I'm going to be extending my supply zone and wait for a tap into that supply zone. Now, if we go back to what I was speaking earlier, I was simply saying that we have the push and then we have the pullback. After the pullback is playing out, we need to see that price is not crossing the extremities, showing us clear rejection, and then going back to tap into this supply zone to then trade the lower low. The way we're going to see this on the charts is if we go back and we demonstrate exactly what we're speaking about. Don't focus on having all these candlesticks and thinking that that's a complicated situation. I just want you to focus on the extremities. We have this bearish push over here, and then we have the pullback over here, and then we have another push and another push to get to the extremity. Now, we saw clear rejection, and then we saw a confirmation that sellers are gaining control over again. Because it broke the last low, we are now reversing to then go back from internal bullish price action to the external bearish intent. So this last push over here, we were just now waiting for the retest to tap into the supply zone so we can target a lower low. Where and when would you take the trade is not this portion, because this portion was just showing us we could never know that this was the portion that we were supposed to trade, because of this portion over here, we now understand that this was the last push and price was able to break through it. Remember I said we need to body close over the wick? Well, that clearly happened over here multiple times, showing us that sellers are now also in control. So all we need to do right now is to prep ourselves that once we tap into the zone, we would be ready to take the sell position from here. So you mark your sell position, you have your stop loss situated with a little bit of breathing room, and you target the previous low, which would be this over here. And what you're going to see is clearly price is going to break through it and continue, because you have the confirmations, you understand what's going on, and this is all you need to be able to understand the narrative. So just a quick recap, we need to understand that in order to take the trade, the model should look like this. You have the position starting from here, and then you have the pullback, a rejection, a confirmation of the rejection, a tap back into the supply, targeting this previous low, and then you leave. Now, what you really have to see is that supply zone over here was another confirmation showing us that there is bearish intent, that sellers are gaining control again, and that only buyers were controlling the internal price action, which was the rest of the push. So we have a push, we rest, and we retest, we tap into it over here, and so this becomes rejected, and this supply zone is a supply zone for the negative reaction. Once we get a confirmation and we get a tap into it, then we could take the trade to then either have this lower low or this lower low. So just to recap, over here we have two things we need to understand. We were able to differentiate between the readable portion and the tradable portion. What did this tradable portion give us back? It gave us 10.16 risk to reward. So If you're risking 1%, then you get 10% back. If you're risking 2%, then you get 20% back. Let's play it safe and say we have risked 1% to gain 10%. So 1% would give us back 10% on this trade. If you were to have a 100K funded account, you would have risked $1,000 to make $10,000. I don't want to say in one day, I want to say in one trade, because this could happen in 2 hours, this could happen in 1 day. Now, the beauty of this is that this portion is going to show up once or twice per week. If you've enjoyed this video, all I want from you is to comment below what questions you have or what topics you would like for me to discuss to bring more clarity on the charts for you. Thank you for watching.